The markets are ripping today after weak tech earnings, strong consumer data coming out ahead of the Fed decision next week, which 75 basis points is all but guaranteed right now. So let's jump in, see what's going on. And the markets are having a good day today. Dow up 800 points, 2.5%. S&P up 2.39. NASDAQ up 2.68. So what is going on? Well, you had some sell-off in some of the big tech names, Amazon, Google, Microsoft selling off a little bit, Facebook. That capital is going back into the Dow stocks. We're going to take a look at the Dow. Some of the Dow stocks having their best day in a while. Apple is surging. Meanwhile, we've got in other news, Elon Musk has taken over Twitter. So we'll see what happens there. Inflation has caused 54% adults to stop or reduce retirement savings. And the Treasury Direct crashes as investors try to beat the key Series 1 bond that was offering 9% interest, almost 10% interest. And then, of course, the housing data is housing market sales are down 10% in the recent pending home sales fell 10% in September, much worse than expected as the high interest rates continue to take a toll on the housing market and real estate market across the country, which is still going to take some time to correct. So if you're in the market to buy, whether it's investment property or a permanent year-round residence, it's going to take a little while for that seller denial to settle in. Sellers are going to, at this point, think that the market's just cooling off seasonally as it does this time of year, and they're going to wait, thinking that prices will come back in the spring. And if interest rates remain high and prices don't come back in the spring, we should see inventory levels start to build a little bit. We're starting to see inventory levels build in some areas of the country. We're seeing big price reductions from distorted, historically high distorted levels that just weren't realistic anyways. 2.5%, 2.3% interest rates drove prices up to unreasonably high levels, just like automobiles, but people continue to buy. Some markets, you're still getting multiple bids. Days on markets are still low historically. And just like when you get into the automobile market, people are still buying new cars. Used car prices are coming down, but new car prices are not coming down that much. There's still a lot of demand, and it's just mind-boggling what people are willing to pay for new cars and the payments that they're locking themselves into. But on the other hand, we're seeing huge distress in the automobile market. People are walking away from vehicles, and a lot of the auto lenders are in big trouble. So let's jump in, take a look at the charts, and here's the Dow right here. So a lot of the capital rotating out of the NASDAQ, S&P into the Dow. The Dow is up now. This last June rally was about 15% plus or minus in total. So this current rally is 14%. And we saw what happened the last time, right? Just completely unwound and set a new low. Is that what we're going to see this time? Well, it is a distinct possibility. NASDAQ did not follow suit with the Dow and pop as much, but the S&P a little bit stronger. So next week with the Fed raising interest rates and definitely going to come out with some tough hawkish talk, because right now financial conditions appear to be easing based on what the markets are doing. The Fed is not going to be happy with the market rebounding, and you can see Apple kind of jumping here on the day today. Nice rebound for Apple, but nothing like the June or July rally off the June lows for Apple. But here's the big one. The VIX is working its way back down. Whenever the VIX is low, look out below. When the VIX is high, it's time to buy. So this was the buy area right here. Last time VIX was at this level was back here in September. And then, of course, this was the August level. So let's take a look at what that looks like. This is August right here. This is September right here. So the VIX is approaching levels where you can expect the bottom to fall out, which could happen next week on the Fed interest rate hike. The dollar is continuing to move up just a little bit. The 10-year is working its way back up, bouncing. A lot of people thought the dollar was going to keep crashing, but as we've seen, it's kind of been doing this all along. This is a little different action on the dollar here, where it could have kind of indicates maybe it was rolling over a bit, and it could, because it did put in a lower low now, took out this previous low here, dropped a lower low. And what do you look for? Lower highs and lower lows. If it pops up here, puts in a lower high and then lower low, and then works its way down, the dollar could be reversing course for a while, but we'll just have to wait and see if that plays out. And then, of course, let's take a look at Bitcoin here, kind of consolidating in this price range, putting in maybe a little bit of a flag there, depending on how this continues out. But markets are going to be closing out for a nice little October. Bitcoin, we'll have to see how the month closes out for Bitcoin. Big monthly close coming up on Monday, which is going to be indicative of where the price is going to be headed. So a lot can happen over the weekend. We'll just have to see if this price action holds up. And then, of course, one of the big winners here last couple of days because of Elon Musk and Twitter. A lot of people anticipating, speculating that Elon Musk is going to do something with Dogecoin and Twitter. But that popped up about, let's see what that was, off the lows. 47%. So that was a nice little bounce in Dogecoin, starting to unwind that. But here's the big one. Take a look at Propy. So Propy, I did a video with the founder of Propy. This was a nice little pop here, which Propy has a tendency to do, was at 47 cents for a low, popped up 138% to $1.12. And then, of course, it's unwinding that move. And it's, as throughout the history of Propy here, it just has a tendency to kind of do that because it's cheap, low cap altcoin, easy to pump like that to get nice little pops along the way. You can see the same thing with ACH. And Gala hasn't done it in a while, but these low cap altcoins, you see a lot of little pops out of them like that. So interesting times. Here's Facebook right here, still bouncing around, consolidating off the lows of $96 and currently bouncing around $99 to $100 today, kind of consolidating. Let's take a look at a couple of other ones here. We talked about Tesla still kind of hanging in there, right? Hasn't really dropped a whole lot here lately, just kind of consolidating. And then, of course, the big news was Microsoft really kind of had a little bit of a blowout missing, but has bounced. Amazon had a bit of a drop, bounced off the lows here, dropped down to $97, back up to 102. I know a lot of people are jumping into Amazon here right now. And then Google was the next one, had a little bit of a drop on earnings to $92 and has since bounced back up to 96. So these are still tricky areas to be buying in when the pre-pandemic high was back in this area, pandemic low here, compared to like a Facebook. When you look at how far these things can go, let's take a look at, well, here's Twitter. Let's take a look at Twitter real quick. Twitter is getting delisted from the NASDAQ, but here's Twitter right here, stopped at 53.60. But let's take a look at Meta. So when you look at Meta here, down below the March 2020 lows, back to 2015, 2016 highs in this range here. So this is a stock that's completely unwound versus an Apple, which is more of a safety trade right now that hasn't really dropped much from all-time highs in the whole scheme of things compared to a lot of the other tech stocks. I mean, right now, it's really only down about 14% from all-time highs, which is still quite a bit. But when you think about the index as a whole, let's take a look at NASDAQ as a whole. The entire index is still down right now 30% from the highs. So Amazon's hanging in there pretty good, but the other side of that coin is the bottom could fall out from underneath of it and revisit these pre-pandemic highs, which the market kind of seems like it's narrowing in on and kind of targeting if you look at the price action in terms of how this is unwinding. And if we go back to 2009, you can see these big bear market bounces as the market kind of unwinds itself and works its way down. So we know the Fed's going to hike 75 basis points. A lot of analysts and economists are thinking, BlackRock seems to think the Fed's going to put some pivot language, dovish language in their talk. But the way the markets are going right now, we can expect the Fed to come out and really talk down the markets again. There might be some dovish or pivotishy or slowing language coming out of a few of the Fed board members, but not Powell. I think Powell's going to come out with a strong message, just like he did last time, slap down the markets. We'll see it unwind, maybe put in another new low coming off these bounces here lately, potentially, and then maybe start to see if a bottom can be put in while we await a resolution to the Russia-Ukraine situation and other geopolitical events around the world, as well as recession watch. The economy is still strong. The Fed has a lot of ammunition to shrug off any attacks or criticisms that they're getting, because what they have been doing right now does not seem to be working according to the markets or according to consumer spending and things like that. So these are the things that I'm looking at. I'll see you in the next video.